Yo, let's talk about Max Payne quick and the strategy that I've been I've been talking about on Twitter. If you get this right, you can make an absurd amount of residual income every single week, basically doing nothing. Selling calls and selling puts is the best side hustle in the world. It's better than bartending. It's better than waitressing. It's better than DJing. It's better than mowing lawns or doing any type of physical labor. All you have to do is identify the max Payne range for a stock for the week and sell calls above it or sell puts below it. And with AMC, because it is so manipulated and it follows so strictly the max Payne thresholds on the open interest when you look at the options chain, it's like free money, right? You're talking about a stock that is massively suppressed, massively manipulated, massively corrupt. And because of that, you're not going to get all these crazy squeezes. But you are going to get a stock that reliably stays in a specific range week after week, so the dealers can maximize their profits on both the call side and the put side, okay? So just let's look at the option chain really quick. And remember, the things that when I do our weekly exercises, and they have been so beneficial to so many people on my Twitter. I'm getting DMs every single week how grateful people are. 90% of people that are on there are just so amazing. It's really just like a small percentage that are just rude bastards. I don't know where the fuck you people were raised. Maybe a barn somewhere. But there's no need for anything nasty on a day-to-day basis. We're all trying to learn. There's so much that I don't know that I am still learning. Worked on Wall Street 6 years, FinTech 5 years, been trading now for 3 years, options for 2.5. All I do is read every single day. All I do is learn every single day. I talk to smart people. I look up videos. I look up on Twitter. Whatever, right? And it's these little things that can just change your life. Could you imagine if you can make an extra $500 a week? Now, obviously, because it's an option, it has to be taxed 37%, which sucks. But still, you make $500 a week. That is $2,000 a month that you didn't have access to before that. And a lot of people in this country have millions of dollars, and like doing something like this, they might not give a shit about. But for the little guy, the person that's really trying to get over the hump to make it, you sell calls every week. You use that money you make to buy calls when it looks like the stocks are going to make big moves. The blue chips, the indexes, whatever. It's just free money. You don't have to dump your salary checks into your trading account. You know what I'm saying? Like, you could just do this, you get residual income, and you're good to go. So really quickly, let's look at July 14th, okay? Here is your options chain. Here's the call side. Here's the put side. The open interest column is the one that we're paying closest attention to, okay? Now, the open interest, do I have strikes on all? Yeah, so I'm going to give you a quick example. July 21st, let's look at OPEX week. You see this gigantic number, 261,000 calls? Go do the math on how much money that is. It's like absurd, like I think like more than 100 million, whatever it is. That many open interests on a 10 strike, and puts on the same side, the same amount of open interest. That is not Max Payne, okay? Max Payne is not, but by technicality, like a technical definition of it, it's the spot where calls and puts can get burned equally on both sides, so the dealers, the one making the prices to the institutions buying these calls, can make the most money. The dealers are the casino hub. In order for the casino to stay open, they have to profit most, okay? So when I look at Max Payne at the beginning of a week, okay, I'm not looking at the 10 strike and the 200,000 calls, because it's never going there. Never. It's not going there. It's not going to break Max Payne and break all these and just explode to $20. That shit is over with. I'm tired of saying it over and over again. Snap the fuck out of it. This is not 2020. This is not 2021. Okay? Stocks make massive squeezes, thousands of percent, when no one is looking. That is not what AMC is anymore. AMC is watched by the SEC, the banks, the hedge funds, the custodians, and every regulatory body in between, DTCC, FINRA, whatever, the NFA. It is not going to make 1,000% squeezes and break max pain levels. It is going to respect them rationally, have some common sense, okay? And it's going to respect the open interest levels. And because of that, because it's so manipulated, because they put 261,000 open interest in calls and puts to pressure it down so it can't move. Like, these are containment trades. Like, do you have any idea the amount of negative delta pressure that comes in on 231 open interest contracts? The thing is pinned. That's why it doesn't move. It can't move. It's got a fucking gigantic paperweight on top of it, and it's not going anywhere. That's how they keep the stock trading in these ranges over and over again. It's a game, and if you don't play it and ride with the dealer, you're gonna get blown out. So, talking about max pain, I want to keep this video less than 10 minutes, so let me just get quick. We're looking at it right now. 32,000 calls, 4.5 strike, okay? That's a shitload, okay? The next lowest is 13,000 at 4. But we are already at 430 right now. We're at 430. We opened the week at 415, okay? So we're 15 cents above where we opened on Monday. There's 63,000 puts at 4. That's a wall. It's a put wall. So they don't want the stock to be below 4. The dealer doesn't want the stock to be below 4, because if it's not below 4, then they make all this money. All this money goes in their pocket. If it goes below 4, the dealer has to pay the institutions 63,000 contracts worth, right? Times 100. Times whatever the price of the premium of the option is. Do the math. It's a shitload of money. It's a shitload of money. So they're not doing that. They're gonna make sure the stock is pinned here, so they get paid that money. So, and Google spoofing, if you want to learn more about how they pin moves. Okay, Google what spoofing is. I can't explain it, but it's just another way they do it on top of the option chain. So right now, 4 is your basically floor. We know it's not going below 4. Not a fucking chance in hell. All right. And the next highest is 4.5, 26,000. However, and this is important, there's 26,000 on the put side, 32,000 on the call side at the same strike. So what is going to hurt the dealer more? 32,000 puts in the money or 26,000 puts in the money? 32,000 calls or 26,000 puts. 32,000 calls. It's just a higher number. It's more open interest. It's more money that the dealer has to pay out of their pocket. Okay? So ideally, right, the dealer wants to keep, and I'm looking at the 4.5 strike because it's basically equal on both. Okay? Any other strike, it's not equal. 13,000, 63,000, 26,000, 7,000. They're not equal. So that is your max pain range. Okay? It's not fucking $10. Like when you go to swaggystocks.com or fucking jerkoffmaxpain.com and it's like, oh, the max pain's this because the open interest is there. Like, dude, these sites are idiots. They don't know what they're doing. I don't know where they get their data from, but the algorithms that control their sites, that you go on Google and look it up, they're like, it's deceiving you because it's not correct. This is why Sam and I are so like hell-bent on making OnlyFlows the best platform out there, because everywhere I look, everything is shit, okay? And the only people that know how to make this good, so people like you that don't know what you're doing and are uneducated on the topic can learn, is if you look at it and it makes sense in layman's terms, okay? You go to any of these Google sites, you type Max Pain, AMC, you get 9 different answers, okay? Their data is all coming from a different subset, you don't know where it's coming from, and you don't know how they funnel it through their API into their site. You don't know what algos they're running or whatever. Procedures in the background for just like programming to show you like a field that is actually giving you the right max pain. This is TD Ameritrade. This is the actual options chain. It is the truest source of information that there is. Period. This is where you're gonna find max pain, not on Google, whatever search engine. So 32,000 on the call side, 26,000 on the put side. It would hurt them less to close it below 4.5 because 26,000 is less than 32,000. I can't make it. It can't be explained any easier than that. So at the beginning of the week on Monday, I told you max pain for this week was $4.51 to $4.99. The reason I told you that was because these 32,000 options, open interest, weren't here. This happened today. Today it happened. Okay? 26,000 calls was there on Monday. That's why I gave you the max pain range of 451 to 499 because they would close it below 5. So the 26,000 open interest contracts on the call side wouldn't end up in the money. Okay? Now 32,000 are there at the 4.5 strike. That changes everything. So if we go to 485, like I have been predicting for since Wednesday of the holiday week, right? Which has been 2 weeks now. If we go to 485, expect it tomorrow or at like maybe the latest Thursday morning, something like that. But this stock, so help me God, will be below $4.50 come Friday at close. Okay? That's the game. Play the game. Okay? Now, really quickly, and I'll have another minute. If you buy a call, you go long to a certain strike. You want the underlying asset, whatever stock you buy the call on, to go above your strike price. That's how you make money. If you buy a put, okay? $4 put. You want AMC to go to $3.99 and below to make money before your expiration. Selling or writing, I like saying writing, I don't like saying selling. Writing options on the opposite side is the opposite effect. So when you buy a call, you want the stock to go above your strike price. When you sell a call, you don't want the stock to go above your strike price or you lose money. So if you sell a $6 call, you don't want it to go to 601 by Friday at close or you're screwed. You're going to lose money. So, right? If it stays below 6 though, $5.99 and below, you make the entire premium that you put in to buy those contracts. So if you do $1,000 and you buy 200 contracts for $1,000, you make 100% of your money. You make $1,000 every single week if it does not close above $6. And on the opposite, on the put side, right? You know our range. We talk about it every Monday. I tell you $4.50 to $5 is your range. Sell a $3.50 put. You don't sell a $4.50 put because it's too risky. Sell something that's $1, $1.50 out of my range that I'm giving you, because there's multiple reasons why I'm giving you that range, and it doesn't have to do with just the options chain. A lot of people are forgetting that I have $15,000 worth of data in front of me at all given times that I pay for. I'm seeing things that I don't speak to you guys about, that I don't post on Twitter, okay? I'm not giving you the secret sauce. Like, you want to figure it out, sorry, figure it out on your own. I will have to charge you charge you money for that information. This is as good as it's going to get right now for free, period, okay? There's a lot of Discords out there that charge you $300, okay? I charge you zero. So all I ask for is a little bit of respect and appreciation in return. That's it. And I will be here for you until the friggin' MOAS happens next year, and we knock this out of the park up to that point. But you have to learn this stuff. If you want to make residual income, sell a put, $1, $1.50 outside of my range below, or sell a call, $1, $1.50 above my range, and you will make guaranteed money every single week. Not a financial advisor. I'm just telling you how it is. I do this every single week, okay? I'm not going to tell you how much I make, but I'm going to tell you it's a lot. So if you do this, you do it slow, you learn how it works. You start with $50, $75, $100, and you work your way up. And every single week, you trial and error, you figure out how the option moves. You screw up a few times, it's okay. But you screw up with low risk. You don't do $10,000 of sold calls and get blown out and lose 200 grand. Okay? Do a couple contracts, figure it out, watch YouTube videos, go on Twitter, and you'll be fine. Okay? But this information is unbelievably powerful. Unbelievably. You can make $250K a year selling calls and watching fucking Netflix. You don't have to do anything, okay? Like a stock like AMC that is so manipulated, it is like a gift from God. It's free money every single week, okay? And when it comes time for the squeeze moves to happen, like the move that was supposed to happen at $8 the week of July 4th, that didn't. That week, because we were anticipating the move because the setup was perfect for 8, because we didn't get that 10% run on Monday, right? I told you that day that it was not going to 8. I told you within 6 hours. I said, it's not going to 8 this week because it didn't get a 10% run today. I knew immediately. That's how good my sequencing has gotten on the stock, okay? If we are expected to run, do not sell calls that week. Use your brain. Sell puts instead. If you're expecting the stock to go up a week, don't sell calls. That's risky because it can go up to that number and then you're screwed. You're going to lose a shitload of money, right? You sell puts that week. And if we're expecting AMC to drop big one week, we're expecting a 20% drop. Sell calls that week. Do the opposite. This is easy. It's easy and you can make stupid money and change your family's lives if you just listen. Okay? Any questions? I know this can be confusing. Hit me in the comments, DM me. I'm sure I can go a little more in depth on how to sell options one of these days, but I can't right now. I'm incredibly busy. I have my corporate job, only flows. I trade all day. I'm getting my wedding ready, which is happening in 2 months. I'm selling my apartment. I can only do so. I'm doing it all. I'm doing it all. So please just be patient. Listen to what I say and keep my post notifications turned on because I say a lot of stuff every day. I probably tweet 10 to 20 times a day. You gotta catch some of the things I say in the comment section because they are really important. So keep that on. If you have any questions, I'm here for you. I am here for you. I am going out of my way to do this for you. I don't care about being popular on fucking Twitter. I'm popular as fuck in real life. I don't care about making money on Twitter from a Discord. I make a fuckload of money in real life, all right? You want real talk? You're gonna get it from me, all right? In the meantime, let's be cool, everyone be kind, and let's fucking make money off this stupid algorithm that killed us for the last 2 years, right? Let's get back the money we lost from the hedge funds. Let's get back the money we lost from the market makers. This is how you beat them, with education and knowledge, not by fucking buying out of the money weekly calls and handing them a basket of money every single week. Use your brain and let's get this done, all right? So again, any questions, you know where to find me.